Alright, it is 8:05 a.m. Central Time on Thursday, November 9th. Let's jump right into our trade planning exercise for today. So, as I mentioned yesterday, the market is now primed for a directional move, and how ES behaves around the 43.96 high volume node is going to determine which way the market could put in that directional move. Today, we're using 43.90 quarter to 4400 quarter as the initial support, as well as the intraday bull bear zone. So as long as buyers are holding ES above initial support and in real time, we're seeing sustained upside momentum and broad market strength. With the Nasdaq also heading higher, we could get an upside directional move. So let's go ahead and set up a long at initial support, and on the upside, we can target a move into at least the 44.13 quarter to 23 quarter initial resistance and the 44.29 to 35 zone. And the initial resistance target, I think, should be adjusted. Let's actually set up the short at initial resistance and see what the potential entry looks like, and then we'll use that information to fine tune our upside target on the initial support long. So in the event that the market does reject and fail at initial resistance at 44.13 quarter to 23 quarter, which is the intraday bias confirming zone, then I would expect to move down at least into initial support with the possibility of breaking initial support and heading down into the 72 quarter to 75 quarter area. So in this case, I'm going to set the final target to 43.75, and the reality is that if the market does break down below initial support, then the market's probably not going to stop at 75 and most likely will end up going lower into the 43.58 quarter to 67.75 zone. But just to be conservative, I'll leave the high probability target at 4400 quarter and the final at 43.75, and based on those targets we can see that a 44.17 entry would give us 3R. So we can use that information and slide our high probability target up to 17, and the final target can remain at 29, although I think if we get that proper upside move, ES could test 44.3775 as well. So let's actually go ahead and slide this up a little bit more. It is the final and extended target, so we'll go ahead and make this at least 30. I think should be fine. So 96 quarter entry would give us 3R. So that sets up our potential long and our potential short. Again, buyers are dominant above the initial support zone, so the short side is going to require more caution. And the only time that it would make sense to take a short above that initial support and intraday bull bear is if we are seeing some bearish indication or signal in real time. So if there's a very notable bearish disconnect on the advanced decline, or if we notice a intermarket divergence between the Nasdaq and the S&P, where Nasdaq is breaking lower and yet the S&P is still hanging around the highs, I think that could make for a nice shorting opportunity. But absent any clear sign of intraday weakness, I think we will have to be careful on the short side because buyers are dominant above 43.90 quarter to 4400 quarter, and because the market could now be primed for a directional move, and on those types of days, zone fades can be quite risky. So even though I might set up some shorts at higher prices, I'm not necessarily looking to short the market unless ES is exhausted in the zone or if there is a real-time intraday bearish signal. So there is, of course, a potential shorting opportunity at initial resistance, and again, this is a preparation exercise, so it's good to be prepared for it, but whether we take it or not is going to depend on the real-time situation. And I'll do the same thing for the 44.29 to 35 and the 37.75 to 47.75 area, and I think these downside targets are perfectly fine because above the intraday bull bear, especially after we've taken out initial resistance, there's going to be a higher probability at the low of day's end. So I think we should be more conservative on our downside targets once initial resistance has been taken out. So even though sellers are likely to be active on first test of 44.3775 to 47.75, and the range potential may only support a move into 44.3775 to 47.75, we don't necessarily have to completely reverse that intraday move, most likely the market will still hang around the upper part of the day's range. So I think a safe bet would be to actually use 23/4 as the final target as well, and that gives us a potential short at 43/4. Now beyond that, we have the range exhaustion zones at 57.75 to 65/4, and then strong resistance at 69.5 to 79.5. I'm not expecting the market to test the strong resistance zone today, but if we get a successful breakout above 44.13/4 to 23/4 and 29 to 35, then eventually the market could be set up to test 44.57.75 to 65/4 and 69.5 to 79.5. So again, we'll set up potential shorts over there, but it's less likely that the market will reach that area of resistance. On the downside, if we break below 43.90/4 to 4400/4 on broad market weakness and sustained downside momentum, then again, because the market is primed for a directional move, we could put in a downside directional move that could easily take the market into 72/4 to 75/4 and even 58/4 to 67.75. On the downside, the 58/4 67.75 is the bias confirming zone, so there is a potential buying opportunity there for a intraday reaction, but we will have to be much more conservative with our upside targets. And I think 72/4 75/4 is the area that could end up getting tested on an intraday bounce. So I'm going to go ahead and set the high probability and the final to 72/4, and in this case the final will also be 72/4, so that gives us potential long entries at 43.60/4 and 54. And even these long setups would only be taken if the market were not selling off on trend down type internals. If the market is putting in a strong downside directional move, then we could even test 34.75 to 39 and possibly even 22.75 to 32.75, and the market would be exhausting the range potential by the time it reached these lower zones. And if it reaches those zones earlier in the afternoon, then there may still be a buying opportunity there. But I think our targets would just have to be much more conservative. I think 50 as the high probability makes sense, and 58/4 as the final makes sense. So we have potential longs at 37.75 and 28/4, with 28/4 being the safer long entry. So that is how the market is shaping up in terms of zone fades today. And then, of course, if we get a directional move and we're seeing clear momentum, there might be some pullback setups, but those will have to be set up in real time. As far as the pre-planning goes, we can really only focus more on zone fades. And like I said, today the market is primed for a directional move. So if in real time we get a confirmation of that idea via sustained momentum in one direction and increasing volume, then we're going to have to back off from zone fades and try to find a spot to get on board. Or if we can't find a high reward to risk opportunity in the direction of the dominant trend, then it'll be better to step aside rather than try to fade that move. One common mistake that traders make is when they miss the directional move, they automatically start looking to fade that move at some point because they think the market's overdone, it's overextended, and it has to turn around. And that's a trap, and it's a mistake that I'm sure has cost traders a lot of money. They miss the dominant trend, and then automatically they start looking for fading that trend. So let's not make that mistake today. If the market is putting in a sustained directional move on sustained momentum, then let's try to get on board that move or simply step aside and let it go. There's no point trying to chase it. If you're not getting high reward to risk, then what's the point of getting into the opportunity? I'd rather stay flat and preserve capital and then be ready for the next ideal opportunity than try to chase a mediocre one, or even worse, try to fade a strong directional move simply because I couldn't get on board that move at the right price. So that is how the market is shaping up today, and that concludes our trade planning exercise. If you found this video to be helpful, then please do share it with other traders, help spread the word. And aside from that, good trading today, and I will catch you in the next one.